Welcome to the Doctors Making a Difference podcast, where we help physicians to be empowered with the tools they need to be successful in medicine, in finance, and in life. Join us as we highlight doctors and other professionals around the world who are making a difference. Doctors change lives every day, but what happens when life changes yours? A single injury, a sudden illness, your career, your income, your future can shift in an instant. The best physicians don't just plan for success, they protect it. At Set for Life Insurance, they believe financial security isn't a luxury, it's a necessity. True own occupation disability insurance ensures that no matter what happens, your future stays in your hands. Because protecting your income means protecting everything you've built. Visit drpodcastnetwork.co/set for life today. Secure your future before life makes the choice for you. So before we dive in today, I want to be upfront. This episode is sponsored by Set for Life Insurance. But let me be clear, this sponsorship doesn't change the fact that Jamie Fleischner has been a trusted expert in physician disability insurance for decades. She's built a stellar reputation for helping doctors secure their financial futures, and she comes highly recommended across the medical community. My goal is always to provide you with the best insights and resources to help you protect your career and continue making a difference. So what happens when the very thing that allows you to help others, your ability to practice medicine, is suddenly taken away? I know this reality all too well because I'm the poster child for disability insurance. As many of you know, my own journey took an unexpected turn when I faced a serious medical challenge that put my ability to practice in jeopardy. It was a wake-up call. I had spent years training for and working as a doctor, but in an instant, I realized how vulnerable I was. That's why today's conversation is so important. Physicians dedicate their lives to helping others, but all too often, they don't protect their own financial well-being. My guest today, Jamie Fleischner, has spent nearly 3 decades helping doctors like us secure their futures. She's the founder and president of Set for Life Insurance, one of the nation's top agencies specializing in disability and life insurance for professionals. Since 1995, Jamie has worked with thousands of physicians to ensure they can continue to make an impact no matter what life throws at them. With that, let's dive right in. And Jamie, welcome to the show.
Thanks for having me.
Yeah, appreciate you being here, Jamie. Would you mind telling the audience a little bit about yourself and why you got into disability insurance and how that came about?
Sure. So I am a 4th generation Denver native, grew up in Denver. My father was in the insurance business, so I was always exposed to it, but I didn't really know what it was about. Went off to college at WashU in St. Louis, and I did an internship in insurance. I just figured I might as well see what my dad does and find out more about it. And it really intrigued me. WashU has a really large medical center. And so I started going over there and working with some physicians. And then when I graduated, I came back to Denver. And within 6 months, my mom became very ill. They were living in Charlotte, North Carolina. They came out to Colorado. And my mom ended up seeing doctors at National Jewish Hospital, the top respiratory hospital, and she needed a double lung transplant.
Oh, wow.
And I became her primary caregiver. So I was starting out in the insurance business and taking care of her full time, which was a tremendous amount of pressure. But what it really drove home to me was the one thing that sustained her was the fact that she had a disability insurance policy. She was a big executive, and that was the only thing that was really sustaining her financially. And so I was taking her to all of her physician visits, and while I was there, I was meeting all these medical residents, so my worlds just kind of combined. And I started working with a lot of physicians, but it really became a passion of mine because it wasn't just something that was hypothetical, it was real. It was something that I saw firsthand, the impact that it made and the importance of carrying this insurance. So ever since, I've expanded and I started working with residents locally, and then over time, as people moved around, I worked with everybody nationally, and I continue to do so to this day.
Wow. Well, and I know you started this in 1995, shortly after finishing your college and training, and I think that's quite impressive that you started at that young age. I wanted to know, was that how you started it? Basically, is your mom experienced this illness and then you came across the kind of the medical system as a patient and a patient advocate, and then just dived right in, or did you have any other mentorship? How did you get into that at such a young age?
So I did do an internship in college for 2 years, so starting in 1993, and it was a full-time internship. It was all year round. I was doing it 30 hours a week, Monday, Wednesday, Friday. I blocked out my schedule, and I had a lot of mentors helping me. I would just shadow as many people. I would go to as many speaker series as possible. And then when I graduated, I wanted to come back to Denver, and again, I just dove right in. And the reason I sort of chose that medical marketplace was because I was taking care of my mom full time. That's where I was all the time. I was at the hospitals, and it was a teaching hospital. And so I just got sort of passed around to all of those different people. So my worlds really merged. But I decided early on that this was what I wanted to do. I really wanted to help people. And by having that experience, it was more than just, again, something hypothetical. This was really my passion, something that I really wanted to help people with.
Well, and your mom, I mean, think about that. There's nobody more important in most people's lives than their own mother, and to watch her go through that. And then I was curious, how did you transition that to physicians? You obviously came across multiple residents and attending physicians during that time, and how did you decide to, with the disability space or just insurance in general, your mom's experience transitioning to doctors specifically?
Well, I think again, a lot of it was just exposure, and that's where I was a lot. And the nice thing about working with physicians is they're kind of part of a community. So you work with a few and you get passed around and you just become the go-to person. So I just started getting referred around. Also, because I was at WashU, the majority of my friends were going into medicine. And so I was just around those types of people quite a bit. And I also think that working with physicians, I think they had a better understanding of the need for disability insurance, the need of being vulnerable. They poured so much into their lives just going through the undergrad, the medical school process, then the residency, and they devoted so much time to building up their careers that they realized that it could just change in an instant. And so it was just a natural marketplace.
Well, and that kind of brings up a good point. I've shared with listeners on the podcast my own story of discovering a tumor at age 43, and this big old a 28 centimeter tumor, very large, and kind of a shocker. I don't even say kind of a shocker. It was life changing to realize that suddenly, in a moment, everything that I had been building and planning and structuring for was threatened. And I think a lot of physicians, me included, just kind of assume like, well, I'm not sure if I'll ever need that. I'm taking good care of myself. I know about medicine. I know what to watch for. But I wanted to know, what are some of the biggest misconceptions and things like that you've encountered regarding disability insurance?
Well, I think that's the biggest part of the misconception of any type of insurance. It'll never happen to me. That always happens to somebody else. You see natural disasters. Oh, that's really sad. That happened to somebody else. You're a physician and you see people coming in and they have things happen to them. They probably all thought it was going to happen to somebody else, but sooner or later that somebody else happens to you. And so I think the biggest misconception is, I can wait. I can always purchase this later. I can, get it another time, or I'm not really, this won't really happen to me, or if something does happen, I'm going to be okay. There's two of us in the household. We're both working, or someone else will take care of me, or my employer will take care of me. So I think the biggest misconception is not really looking at your own vulnerabilities and recognizing that something could happen. And if it does, are you properly prepared? Because it's really sometimes hard when you think about how vulnerable you might be and the fear that that might cause, thinking you've worked your whole life to get to where you are, and now you've got a lot of loans, or you have dependents, or you're relying on your income to build up everything financially in your life, and how it can just change in a second, as you know. And so I think the biggest misconception is thinking it's not going to happen to you, or procrastinating and just thinking, I can go get this later. So even if something doesn't necessarily happen to you, the thing about disability insurance is you can only get it when you're healthy. So even if you don't have a tumor or something as significant as that, you can also have an adverse change in health. You can, have a back injury, or I'm in Colorado, a lot of People get injured skiing, they blow out a knee or something happens. Even something as seemingly minor as that can preclude you from having full coverage, meaning you apply, they're not going to cover that knee. They're not going to cover the back, or you can have some kind of diagnoses. So I think the biggest misconception is I can get this whenever I want it, or it's never going to happen to me.
Yeah. And Jamie, I mean, you're preaching to the choir, but it's so true. I'm just thinking back my own experience. I just felt my stomach one day. That was it. I was feeling fine. I'd lost a little bit of weight, but I'd been running and I thought, well, I'm just, maybe exercising, lost about 10 pounds. And I thought, well, that's probably healthy, right? We tell people to lose weight. But I found this mass on my stomach and asked my practice partner to take a look and ordered a CAT scan. And I was actually working in the emergency room that night when I got the result. And instead of saying like you have an enlarged spleen or something, it just says 28 centimeter mass, likely sarcoma. And I mean, it's like a ton of bricks falls on your head right then. And I had been just exactly what you said. Those things happen to somebody else, or those are patients, or you kind of go to this mindset of it's me, not them. And I think we have to survive and have this sense of predictability in our lives. But in that moment, it just suddenly was there, right in your face. And then the opportunity to go quote more disability insurance and all that stuff really wouldn't have been an option at that point, And so it was good that I had set up something years before, and I was so thankful. But I wish that in that moment, I wish I had more. I wish I had gone back and reinvestigated that every couple of years as income and needs and different circumstances had changed.
Yeah. And that's another thing that I think a lot of people, so some people, they go and they get their disability insurance and they think this is great, I have it. And they really don't think about it again because nobody sits around and thinks about, gosh, if something happens. But one of the things that we try to emphasize with our clients is regular reviews. And so it's really important not just to get the insurance, but to make sure it's up to speed with you as your life changes. If you've changed your job, if you've had children, if you've gotten married, if you've gotten divorced, any of these life changes will impact how much you need or what you need. And if you bought the policy long ago and it's not up to speed, I've had clients who've done that. They've got a policy, they don't increase it. And by the time they go on claim, the policy is barely enough to even cover the mortgage. It's something, but it's not adequate. So it's really important to not only have it, but to make sure you revisit it every now and again.
Yeah. And I want to just emphasize for a minute, like my own thoughts on vulnerability of physicians. And I know, Jamie, I wanted to kind of pick your brain about this a little bit. You go to medical school and residency, fellowship, and by the time you finished, all you really have is a document, a piece of paper, or a certification saying I can do this thing. But until you are out of debt and kind of financially independent, your family, other people are dependent on that income. And while some of our peers have had the previous 15 years or so to start saving and build up some of their life savings and put some equity into a home, many times physicians have not, and they start that process when they're in their mid 30s. And so suddenly when your peers are in their 40s and they're saying, okay, we've purchased a home, we've got a nice car, we've got all these things, doctors are just barely back to broke.
Yes.
And we are really vulnerable in that stage, especially if something happens and you can no longer derive income. The certification, the paper that we have that says we have all this qualification doesn't amount to much if you can't work in it.
And that's another misconception too, is a lot of physicians, as you know, come out and they have a ton of debt. They have a lot of student loans and then they take on a mortgage or other debt. That debt does not go away if you become disabled. Some of that debt does go away if you die, like federal debt. If you die, your beneficiaries are off the hook, but not if you become disabled. So you're even more vulnerable. If something happens and you're on the hook to, pay back all of those student loans and you don't have an income, it can be a really bad situation. So
That's a
you're
good
right.
point.
So early on, it's really important to cover that. And a lot of people also don't realize that when you're earning an income, not only are you paying down debt, but you're also accumulating assets. So if something happens early on, you're not saving for retirement. So most disability policies cover you until age 65, and then with the hopes that you're going to get some for Social Security. But early on, you're also assuming that you're going to be socking money away for retirement. And so people aren't even thinking about that potential income.
Yeah. Well, and I remember, I mean, we can come into this a little bit more down the road, but I remember the first time I saw the cost of own occupation disability insurance, and my eyes kind of popped like, whoa, that's so much money. But then when I look at how much value that has added and what it has actually meant to me and my family to have that safety net, that background is invaluable. I couldn't put a price on it. I wish I had done more of it. And not everybody's going to need it. And that's the gamble of the insurance industry, is to hope that not everybody needs it. But a lot of doctors do end up needing it. And I think we tend to be caregivers. We care for our patients. We look out for others. But sometimes we forget to tap the brakes and kind of put our financial house in order so that we can continue to be there for our families. Because the patients will find a new doctor, but our families are not going to have a new dad or a new mom, and nobody else is going to pay that debt. So
Yeah.
it's so crucial to be prepared in this way.
And so a lot of people do say, well, I don't want to how expensive is this going to be, or how much is it going to cost? So a couple of things. It's more expensive for women than it is for men, just because based on risk. But if you're getting your policy in your 30s, you can expect to spend between 1% and 3% of your annual income to cover about 80% of your take home pay. So if you're thinking about it, okay, well, if I took a 2% reduction in pay, knowing if something happened, I can at least pay my bills, that might be an easier type of thing to think about. For women, it costs about 2 to 4% of their annual income to cover 80% of their take home pay. So I look at it from the perspective of, okay, I'd rather have a little bit of reduction in income, knowing if something happens, I'm going to be able to pay my bills. I'm going to be able to save for retirement. And physicians are pretty vulnerable. If you look at the statistics, about 1 in 4 physicians at some time in their career are going to lose time based on a sickness or an injury of at least 6 to 9 months, some longer, some shorter. But, statistically speaking, it's a relatively high probability, and that's why it's expensive. If it wasn't likely to happen, it would be really inexpensive because, the insurance companies know it's not going to happen. The reason it's expensive is because it's a high risk.
Right. Well, and the title of this program is, Doctors Making a Difference. And I would argue that having these things like disability insurance in place allows that to continue to happen, because if your financial house is in order and you're working toward financial independence and you're doing all these things to play that financial game correctly, you can stay in the business for longer. And if that happens and you do experience a disability that puts you out temporarily or permanently, you can still work somewhat, or you can still find a way to, if you're able to work with your disability part-time, you can still find a way to continue to do that thing that you trained for so many years to do.
And that brings up another really good point. I know you mentioned own occupation. So some of your listeners may not know exactly what that means. So when you buy an individual policy, you really want to have one that has the definition that says own occupation. So what it says, if you're sick or injured and you can't work in your medical specialty, whatever you're doing at the time of claim, you're going to get paid your benefit, even if you pivot and do another specialty or another occupation. So let's say something happens and you're really vulnerable and you're, immunocompromised and you can't go in and see patients, but maybe you can podcast, or maybe you can make income doing something else. You're still going to get paid your benefits on an own occupation policy because you couldn't do what you were doing at the time of claim. So that's a really important distinction. Most group policies don't have that. So if you are only relying on your group policy from your employer and you become sick or injured, you're immunocompromised and you can't go in and see patients, they will pay you. But if you do anything else, you do research or something else and earn an income, they don't have to pay that claim. So it's really, really important to have that specific language in your policy. Because I do think now we're in a gig economy and there are other ways to earn an income in other ways. You don't want to be penalized by an insurance company telling you, oh, we're not going to pay you because you're able to do this or that. So that's really important.
Right. Well, and I think there's kind of a financial game to every career, but as a physician, that's kind of the deal. You take out quite a bit of debt and you put a tremendous amount of time and effort into becoming excellent at what you do. But the trade-off is you get a larger income, but you've also put off a lot of years of potential earned time, and the time value of money is not on your side when you first start. And so having the ability to protect that income as the asset to protect, just like you would protect your home or something else, is I mean, it's just so valuable. That's the thing that you've spent all of your early years, some of the most prime years of your life is developing that skill set. And if you don't protect it, it would kind of be like leaving your home or your most valuable asset uninsured. At least that's how I've thought about it. And I don't know if you have any other thoughts on that.
Well, I think a lot of people, they try to put a dollar value on what their most valuable assets are. Like you said, your home or your car. Really, if you were to calculate your potential income, that's your most valuable asset, your ability to earn that income. It's millions of dollars. If you look at from the course of, finishing your training till retirement, let's say it's 30 years, that's worth millions of dollars. That's most likely worth a lot more than your home. And people never question insuring their home. They never do. But a lot of people either fail to protect their income or just don't think about it. But that's the driver of every other financial decision that you make.
As a financial industry expert, disability expert, I'm curious if you were quoting a plan to somebody that is in their residency or early part of their career or mid-career, what would you tell them to look for in a policy? Because again, we're offered all sorts of different products. Doctors are not generally very financially literate when they start out because there's no formal training unless you seek it. And I was curious, what would you tell somebody to go look for if they say, I'm choosing an own occupation policy? That I think that comes in more than one flavor, and I'd be interested to hear what specific components of that you would recommend for people to look for.
So first of all, I think when you're looking for disability insurance, it's really important to work with somebody who's an independent broker. So I don't work for any particular insurance company. There's agents who work for a company and they'll tell you this is the best policy. And then there's independent brokers like me who represent all of the companies. So when my clients come to me, I shop it around. And there's really only 5 companies that offer that own occupation policy. So what I might recommend for a female pediatrician in California might be completely different than a male surgeon in Virginia. It just might be just the way it's all priced and what their needs are. So there are a couple of core things to look at, but again, it's really important to weigh all of the options. The first thing, like you mentioned, is the own occupation. You want to make sure it covers them in their medical specialty. Number 2, you want to make sure it has residual or partial disability. Because what this says is you only need a 15 or 20% loss of income. There are a lot of instances where maybe you're not totally disabled, you're still working, but on a limited capacity. So I've had clients they're going through chemotherapy, or maybe they have severe migraines, or they have something where they're still working, but just limited. The policy will pay them for partial disability. That's really important. The third thing, I think one of the most important things to get on a policy early on is the ability to increase it in the future without having to answer medical questions. So those are called either future increase option, benefit increase, or there's a bunch of different names for it. But you get your policy and then you can increase it, like we mentioned, as time goes on, as your income increases, and you don't have to disclose if you've had a change in health, if you've taken up skydiving or you're traveling to all these countries or anything else. They don't need to know about it. The only thing they can ask you is financial questions. And then there's some other things too. You can also have an inflation rider on your policy. Typically, that only takes place after you've been on claim for a year. So it's great to have early on in your career because if you have a long-term claim, it'll keep it up with inflation. That's also the kind of thing, once you get into your 50s, you may pull back on your policy and maybe pull some of those things off of the policy. But those are the primary things to make sure you have on your policy, especially early on.
So another one, I think most physicians will relate with this. Whole life insurance salesmen are notorious for finding residents and early phase physicians. Please contrast for me the difference between universal whole life type insurance versus a true own occupation disability insurance, because these are extremely different products, and one is sold to people by salesmen who are working for a company, and one is a product that you need, that you have to go seek and work with a independent agent that's not trying to sell a product on behalf of a specific company.
Yeah, so whole life insurance, that's actually life insurance. And I do not generally recommend that to, especially during residency. It's a very expensive product. A lot of these agents are very aggressive. They come in, they do this great song and dance about how it can, save on taxes. And there are some great things about that, but again, I don't generally recommend that for residents. Life insurance is sort of another conversation. I think life insurance becomes important when other people are relying on you, if you're married or you have kids. And most of the time, I'd say 99% of the time, I recommend just a term life insurance policy. So really, you want life insurance to cover you until you can self-insure, meaning maybe if something happens to you, your family needs $2 million, you need it the next 20 or 30 years. The goal is during that period of time, you accumulate that many assets. So by the time the insurance expires, you have enough of those assets or your dependents are up and out. So if somebody's coming after you during residency and they're starting to push whole life, I think that's a big shining red flag. Be really careful and just say, wait a minute, pull back and say, are you looking out for my best interest, or is this something that's being pushed upon me? Oftentimes, like you mentioned, those are coming from people who work for one particular company, and they're not spreadsheeting and looking at all of the available options. Most people, especially during residency, do need disability insurance, whether you're single or married or divorced or whatever your situation is. In permanent or in life insurance, again, that's another whole conversation. Term insurance, again, is usually what I recommend, and really only when someone else is relying on your income.
Yeah. Well, so we're kind of talking about three different things. Whole life insurance, universal insurance is a product that I feel like is sometimes sold to people, and it's put in terms of like, this is disability insurance. This will protect you in
Oh,
case, sometimes like, you can access in case you need it. It's put in those terms, but it's not truly an own occupation
no, no, no. It's
policy
not
at
even a
all.
disability product.
Right,
No,
not a
no, no,
disability
no.
product, but
Yeah,
but to residents, like I remember my own experience, like, oh, this will protect you in case you need it for something down the road, and so anyway, that policy, the salesmen that kind of put that out are selling something like, say, it's not usually a good product. Term life insurance is very simple. You pay a relatively small amount. You have a large amount in case you die, like you said, if somebody
yeah,
is dependent on your income. But the one we're emphasizing today that I think is of such high importance is to have own occupation disability insurance with the
yeah.
riders like you described.
Yeah, exactly. And so, yeah, somebody's telling you that a whole life policy is going to cover you if you're disabled. I'd be very concerned because
Right.
I guess technically you can draw, I mean, a whole life policy, even before it takes about 10 years to accumulate just anything in the policy. And then I guess you could technically pull some money out if you became disabled. That is not the best planning tool to cover you if you become disabled.
Yeah. So
So.
no,
I'm
own
sort of a
occupation.
purist. You have term insurance to cover life insurance. You have disability to cover disability insurance. You have your homeowners to cover your home. It's a totally different risk. And if somebody's telling you, if you have great homeowners policy, it's going to cover you if, something that it's not related to your home, I don't know.
Yeah, keep it simple. I like
Exactly.
it.
I'm a purist. Yes.
I like it. Well, so Jamie, share with me if you can. I'd like to hear any stories you have. I know you've probably have hundreds of stories, having been in the industry for many years. Do you have any stories of people that you have helped specifically with disability insurance? I've shared my story, but I'm curious if you have any other stories like that that our audience might find motivating or helpful.
So I do, I at any given time, I always have a lot of different people on claim. That's just the nature of it. But there's been a couple of them over the years that have really kind of been close to my heart. One of them, he was an orthopedic surgeon client of mine. I actually went to the hospital and I gave a presentation. I got to know him, and he bought this policy, and he was putting it in force August 1st when he was starting his attending job. And I remember I got a call from his wife on October 8th. I remember it was 888. I just remember the date. And She was calling like, oh, I know you're calling. The policy's in force. Everything's good to go. And she's like, no, my husband was in a very terrible accident.
Mm.
It was actually, he was driving to work and he got hit in his car by an 18-wheeler and his car just blew up in flames. And there happened to be another accident nearby. And so they came over, the first responders were there immediately. They choppered him to the hospital where he was actually working. And he was so burned that his fellow residents didn't even realize it was him that they
Mm.
were, doing all of the emergency care on. And so I assured her that his policy was absolutely going to cover him. I mean, it was enforced, and thank goodness he got this policy. So he, over the course of several years, had multiple surgeries, and he's actually back up and running. He's totally back doing surgery and everything.
Oh,
But
that's
the first
wonderful.
few, yeah, so thank goodness he was okay. But I mean, it really shook me because I mean, his policy was enforced for less like 8 days
Oh, wow.
and something happened. I mean, it was just really close. So that's one. I had coincidentally, another orthopedic surgeon. She had been a client of mine for 20 plus years. And she developed rheumatoid arthritis, but it was something that sort of gradually happened. And so she was still trying to work as much as she could. And then one day she went to tie her shoes and she couldn't get up. Like her whole body just froze. And she contacted me and I was like, you've got a disability claim. She just couldn't work anymore. But apparently she had been slowly, gradually reducing how much she was able to work, and she hadn't contacted me. She hadn't even thought about, oh, this could be a disability claim. And so I helped her file a claim and they went back from the data diagnosis and they calculated the months leading up to the point where she couldn't work anymore. And so she got some of the back pay, but she's going to be on claim for the next 20 years until she's 65. Because there's no way she can go back to work. So she's so grateful that she has this insurance.
Yeah, we just don't get to pick our trials. That's the challenge. We can
I
choose all
know.
the healthy things. As physicians, I really do think most people try to live a healthy lifestyle and make good choices. And, maybe not everybody, but most people try to practice what they preach. And yet,
Yeah.
you can get in an accident, you can have a tumor, you can get an autoimmune disease. There's so many things that happen, and having the security to protect that income it makes sense. I think everybody should do it.
Yeah, and it's what's great. I mean, like, so these are some clients that I actually really got to know, and it's gratifying when they call you and you can actually do something about it. I can
Hmm.
say, you're going to be okay. We're going to file a claim and, they're getting their checks and they're in great shape. The worst type of call that you can get is somebody who calls you and says, I know I've been putting this off. Now I'd like to get a policy, but I was diagnosed with this. Is this going to be a problem? And it's like, it's too late. I can't help you. Those are the most frustrating calls that I get.
When you do actually file a claim, when somebody comes in and says, I need to access this, what is your advice on that? Do people file right then and there, or should they file as soon as the disability is known, or do you recommend to
I
do a
think
waiting
that as
period?
soon as you know there's something going on, I think it's best to at least start the claims process. Sometimes people file a claim and it turns out that they heal really fast and they don't need it. Technically, you're supposed to notify the company within 30 days. But the claims process can take a while just because they have to retrieve records from your doctors and they need financial forms. So when somebody contacts me and they say, I think I need to file a claim, the first thing we do is make sure you submit the forms and get everything submitted properly. The second thing that I tell people is immediately start just keeping track of everything, especially all of the financial documents. Because again, if it's a partial claim, they're going to calculate on month to month what's the loss of income. So, like my client with the rheumatoid arthritis, that's very different than somebody date of the accident. He's totally out. That's a little bit cleaner, if you will, for a claim versus somebody over the course of the last year slowly, gradually was working less. So they had to go back month to month and look at all of the income lost. But the most important thing you can do is just keep track of everything. And the other thing, too, I think that's really important, and a lot of people don't do, is when you get a policy, make sure you tell somebody else. Because if you're in an accident, you may not be able to contact the insurance company. So, like this client of mine, the spouse called me and said, hey, he's been in an accident. they're the ones that are going to be filing all the paperwork. They're the ones that are going to be doing that because, you might be incapacitated or unable, or you just don't want to deal with it if you're in the
Right.
hospital. So I think that's something too you want to notify, or you want to let people in your life be aware something happens to me, here's what you need to do.
Yeah. The individual you referenced that had the rheumatoid arthritis, would it have been an advantage for her to have notified the company earlier in the process rather than having to go dig back through records
I
and
think
claims?
so. I think she didn't, I think it sort of happened so gradually, and she didn't want to really accept the fact that she was, there was probably some other things going on there where she didn't want to totally see that the direction it was going. Had she done it as soon as she was diagnosed and started losing income, it would have been a little bit easier because we had to go back through records for a whole year, and they had to look and hours billed and loss of income. So there was a lot of paperwork for her. Had she done it from the very start, it probably would have been a little bit easier and less frustrating.
Yeah. Are they looking at a percentage of income loss or a percentage of time lost, or what would you
Well,
say is the biggest
they'll
thing?
look at both. So it just depends on, I mean, for some people they bill and then it takes 3 months to actually get the income in. So it depends on however her practice was doing it. Some people, I mean, if you're an emergency physician, it's a lot easier. It's time lost as of this date. You can just look at that versus somebody who's billing for surgery. There could be 3, 6 months delay before you actually retrieve, the income. So I think it just depends on the situation.
No, really helpful. And these are good practical tips for, obtaining insurance and then keeping track of records, knowing how to use it. And so as you contemplate all this, if you could sit down with a medical student, or if you could sit down with every medical student today, right now in 2025, what would you tell them about insurance?
So I think the most important thing, and a lot of our clients come to us during residency, they're in training and they're really immersed in just working all of the time. I think it's important to tell them at some point you're going to need to get this kind of insurance because you're everything's going to rely on your future income. The earlier you can do it, the better. And so we try to simplify the process. The benefit of getting it during residency, you also get discounted rates, which carry over throughout the whole life of the whole policy. So get it as early as you can while you're still healthy. Get the discount, and even you can get a small policy. Some people have 6, 8 years to go during training. Just get a small policy, something you can afford, and then you're kind of done in the purchasing process. Then once you're done with your training, then you can adjust it and make those changes. But it's really important that you get that policy early on and that it has those important features.
Does it still do those discounts pertain, persist? Like if you get a much smaller policy during residency and then you go to your attending job and have an increase in your salary, obviously you're going to pay more because you're getting a higher face amount for the value for the policy. But I wondered, does that transition into additional savings for residents who have a policy during residency and then increase afterwards when they're in their attending job?
Yes. So when you buy your policy, especially in residency, you lock in your rate at your age that you get the policy, at the specialty that you're in at that time, and you also lock in those discounts. And you also lock in where you're living. So if you move to a place like California, which is more expensive, you're going to be paying, say, Colorado rates and not have to do that. So everything's based on where you are at the time of application. So you're never going to be younger, and you're probably not going to be healthier. So you get it when you're younger and healthier. But those discounts do apply to future increases too. So you could be saving 15%, not just on the initial policy, but also on all those future increases. So 8, 10 years down the road, when you go to increase the policy, even though you're no longer in training, it's still going to be at those discounted rates. So, I mean, whenever you can save money, it makes a big difference. You're getting the exact same policy. You're not compromising anything. You're just paying less. So it makes a lot of sense to do it that way.
Yeah, that does make sense. I wish somebody had told me this then. I think for all of us, you can go back and learn lessons, but take it from me, the earlier you start, the more you know, the better on this. So,
Well,
what
and that
about,
brings up another point too. So there might be some of your listeners that are kind of like you going, "Oh, I didn't get the disc, I didn't do this or I didn't do that." It still might make sense to review your policy because as time changes, as your life changes and goes through changes, it's still really important to review your policy. Is it up to date with the amount of benefit that you need? Has your life changed? Maybe now you have children or you have a mortgage or you have a business practice, maybe you need more benefit. Or also, I mean, I have a lot of clients that are now in their 50s, their kids are up and out, the mortgage is paid off. They just want to get to the finish line. Maybe they don't need as much insurance. Maybe they can trim the policy. So, again, it's really important to get the policy early on and have all of those features. But I think it's just as important mid-career and late career to still review and make sure the policy is doing what it's supposed to do, and maybe you're not overpaying for things you don't need anymore, or maybe you're keeping it up to date with where it needs to be.
Yeah, well, and kind of think of it like a tool in your toolbox, and you need to adjust it to match whatever chapter of life you're in. And like I shared on my experience, I quoted a policy 10 years ago, and it was great, but I wish that I had gone back every 2 or 3 years to adjust and just say, are we still in the ballpark on income replacement and family needs, and doing it periodically is wise. And I think I wouldn't be able to do it now, but I wish that I had done it then because it would have made sense. It would have matched a little bit based on what stage of career I was in, and I think everybody could probably benefit from that.
Yeah, so I mean, I think it's really important. Again, you might have people that bought a policy 10 years ago and they're like, I haven't even looked at this. I don't even remember what I got. Is it a good policy? And what am I paying for? And the same goes just kind of for all planning. It could also be your will. I mean, some people might have got a will when they were married and now they've got 3 kids and a mortgage and properties, and maybe it's time to update the will. It's really important that all of the planning gets updated over time. You don't only want to do it once and not think about it.
No, that's good advice. What would you tell medical students specifically? Most medical students have no income because the school is so all encompassing. They're living on loans, but they may have other people who are depending on them for a future income. And certainly people can be injured. I had a medical school colleague who was severely injured during medical school. I was curious, yeah, how would you proceed with somebody at that stage?
So medical students, you can't get a policy until you're in your last year. So if you're a first or second, third year medical student, there's really not a lot you can do. I think it's good to be aware of what's coming and you're going to be getting this policy. But your final year of medical school, you can get a policy. And one of the advantages of getting it as a medical student is you may not have even declared your medical specialty yet.
Hmm.
So again, everything's based on where you are at the time of application. So you can get a policy during medical school as an internist, which is going to be one of the most favorable risk class because they assume you're not doing procedures. So you're going to be paying internal medicine rates, but you might be going on to doing anesthesiology or surgery or something that's deemed more risky, which would be priced more. So you might be able to get a policy that's less expensive and it'll still cover you if you do go on to those other specialties. So that's something to be aware of too.
Okay, no, so that's great advice. So fourth year medical students, probably a good idea to take a look at it. And you can't afford a expensive policy at that point, but you might lock in some of these discounts that could benefit you for years to come if you keep that same policy. So,
That's correct. That's correct. And one other thing I was going to mention is something that's becoming really big right now, and something that we have access to for medical students and medical residents is something called guaranteed standard issue policies. And this is not available from all agents or brokers. It's only a select few of us around the country, but we're able to get policies for people at specific hospitals that are called guaranteed standard issue. They're able to get a policy with no medical questions asked. So it's kind of a big deal. So especially if you have any kind of medical history or anything else, you don't even have to disclose it. So, and that's becoming a really big deal too. So some of your people might be listening going, oh, well, I don't know if I want to apply. I'm a type 1 diabetic, or, or I do all kinds of rock climbing, or I do, whatever it might be, because getting a policy can be really difficult. They ask everything and a lot of medical questions. So if you're able to get a policy without having to answer any medical questions, all the better.
is that just pertain to certain hospitals or certain employers, or how would a
It's at
person go
certain
about that?
hospitals. So we have it, for instance, we have at U Chicago, Mayo Clinic, University of Wisconsin, just a couple some hospitals around the country. I think we're up to about 60 or 80 hospitals. So it's becoming more widespread. So it's the kind of thing that you can also ask us, hey, I'm at such and such hospital. Can I have access to this guaranteed standard issue policy? So it's a great thing for people that, especially if they have health issues
Yeah, and
to get
those
qualified.
are those are own occupation policies.
Yep.
The guarantee.
Everything else about the
Wow,
policy is the same. Still
and the
discounted, still own occupation. And I have a client, they sign up for on Monday and by Wednesday the policy is available. Just done.
amazing. So that's something that again you're paying similar rates to what you would pay if you had all the other discounts. But and it's that. So if you work for one of those facilities, that's great advice. I
Yeah.
didn't know that was a
The
thing.
only
So
drawback is you're only pre-approved for up to 15,000 a month in the future. So, because they have to limit their risk exposure at some point. So if you are in a medical specialty, so I have, clients that are getting a guaranteed issue policy, maybe they're surgeon or ophthalmologist or some higher potential earning specialty. So in that case, what we do is we get the guarantee issue policy first, and then we also get another policy with another company and we layer it on top, and that way they're pre-approved for up to 30,000. The second policy, though, they'll have to answer the medical questions.
hmm.
So if they're concerned that they have high income potential and the guarantee issue policy is only going to cover to a certain point, there are workarounds for that as well.
So what are the rules about stacking policies like that? I mean, can
So they
people?
do have to coordinate. So the thing about the guarantee issue policy too is if you apply elsewhere first and they put an exclusion on for anything or you get turned down, you're voided. You cannot go and buy that guarantee issue policy. So if you are at one of these hospitals and you have the guarantee issue available, get that first. So you get it, you don't have to answer any of the questions, and then you can stack on top. There's only a certain amount you can get through residency, like you can get up to 5,000 a month. So the ones that want to do more than one, I usually do 4,000 a month of the guarantee issue, 1,000 with another company. We combine those, and then when they finish the residency, they're pre-approved up to 30,000 in the future.
So after residency, they could stack the policies up to that $30,000 a month
Correct. If
issue.
they have the income to support it, yes.
Yeah,
That
right.
the
They have
only
to prove
question they'll
income, but
ask in the future is financial. Yes.
wow, no, wonderful options. That's very
Yeah.
educational. So thank you.
Yeah.
So another question about this. You've been in the industry for like 30 years, which is amazing. What has changed about the policy other than these guaranteed standard issue things you just mentioned? What other things have changed and evolved over that period of time?
So interestingly, not a lot has changed that much. There are fewer companies available. Like when I first started, there were like 8 or 10. Now there's 5. So the number of companies offering the insurance is less. More of it is done online and that's changed. But the actual policies themselves, I mean, I still have clients that bought a policy 30 years ago. It was own occupation back then. It was really priced similarly. It hasn't changed all that much. Um, but the guaranteed standard issue is probably the biggest change.
Yeah, no, that's wonderful. I didn't actually know about the guaranteed standard issue for the kind of a
Yeah.
long-term own occupation policies.
So for residents and medical students. So, and if you're not sure, if you have somebody's listening who's a resident going, oh, I wonder if I'm at one of those hospitals, contact us. We can let you know if we have it available.
And those plans are specifically for residents and medical students.
Correct.
Okay, well,
Not for dental students, unfortunately.
oh,
So,
interesting. Yeah, you'd
yeah,
think it would be for both.
no, unfortunately not. Yeah, just medical residents and medical students.
Okay, Jamie, I want to try a couple of rapid fire questions for you. It's
Okay.
just kind of as we're kind of getting here to the end of our time, I want to try a couple of things, kind of a lightning round here. One is, what's the number one piece of financial advice you would give to a physician?
The number one financial advice I would give to a physician
Hmm.
is first things first, make sure your income is covered.
Okay. Number two, what is the one myth about disability insurance that you could bust, that you would do it today if you could?
The biggest myth is that it's really easy to get when you want it.
Okay, that is a myth. You got to go get it early when you're still healthy. That's
Yeah.
right. Okay, number three, if you could go back and start your career now, what would you do differently?
If I were to do something differently, initially I was doing more broad planning and then eventually I just focused on disability insurance. I wish I would have just only did disability insurance and life insurance from the beginning and not the broad planning.
Okay, makes sense. What is one of your favorite success stories of a physician who you've worked with on insurance?
I think my favorite success story is the person with the rheumatoid arthritis who's so grateful that she has this insurance. She sends me thank you cards every year and she's just so grateful for it. So it's really satisfying knowing that I helped her.
Yeah, it's life-changing for her. So
Mhm.
wonderful. Last one. What book or resource would you refer us to as physicians if we're trying to plan our financial future?
So I'm kind of old school. I think something that I read really early on, but still resonates, is The Millionaire Next Door. I think living below your means. And I think, even when you finish your training, if you can continue living like a resident till you pay off those bills and not get caught up in all of the material things, I think that that's the advice that I would give physicians.
Awesome. I love it. This has been so helpful, Jamie. So thank you for sharing. I mean, just this stuff is vital to physicians in training, physicians in practice, and I think everybody should know it. I wish that I had known this years ago when I was a medical student and resident. I knew about it, but I didn't know enough details, and I hope that we can, through this podcast, give the gift to others so that they can understand it. So if you're a doctor right now listening or a student, I just can't emphasize it enough how important it is to get these financial tools in place. And the sooner you do it, the better. And I think we've abundantly emphasized that throughout this podcast. Jamie, do you have any other final thoughts for our audience?
No, the only other thought, if somebody wants to review their current insurance or they have questions or something didn't make sense, I'm happy to talk to them. Just go to our website, setforlifeinsurance.com, and I'm happy to help out.
Awesome. Yeah. And, to learn more, explore it. I'm part of this Doctor Podcast Network. You can go to drpodcastnetwork.co/set for life. And this is such an important thing for your financial future. And I just really appreciate it, Jamie. So until next time, I look forward to talking to you in the future. Thank you so much.
Thanks for having me. I really enjoyed it.
Thanks for tuning into the Doctors Making a Difference podcast. And thank you for what you do to help your patients and your community. Your work truly helps so many people. We produce this content to help you have the tools you need to stay in medicine and to highlight the amazing work being done by physicians around the world. Please note that while I am a physician, and many of the guests on this program are also physicians or other professionals, the discussions on this podcast do not represent my employer or any professional organizations to which I belong. This podcast is for your information and entertainment only, and should not be taken as professional advice. You should seek appropriate professional advice pertaining to your own situation. Please check out more of our content on our website, doctorsmakingadifference.com. Also, please follow, like, or subscribe on your podcast player or YouTube channel and give us a 5-star rating. It really helps to spread the message. Finally, if you'd like to be a guest on the podcast, or if you'd like to nominate someone else to be a guest, please visit the website or email admin@doctorsmakingadifference.com. See you next time.